I was a new and developing trader. One of the things that was really difficult for me was price action, simply looking at a naked chart and just knowing when to enter, how to enter, and why. Over time, these things became simplified for me, and I want to show you exactly how I, as a professional trader, find a high probability opportunity with confidence and how I execute an entry and why I'm so confident when I take that entry. So if you're a new or struggling trader, then I want you to tune in and watch exactly the steps that I take you through, and then try to apply it to your own trading to see if you can achieve this exact same approach over time, which is going to help you become confident. But just remember, there's certain factors to trading. You're not going to become a pro overnight. It does take time to develop, and slow and steady wins the race in this field. Move the needle a little bit each day. And if you allow yourself to do that, you are going to become a more improved trader. So let's go ahead and hop right in. Before we do me a favor and smash the like button on this video. Also, make sure you subscribe and turn on that notification bell so that you don't miss any of our future content. And let's not waste any more time, guys. Let's go ahead and hop right in.
Yeah, I know I got problems, and I don't know where to go. I don't want to put the blame on you.
So one thing that's going to help you get desirable results when you're trading is making sure that you're following a rules-based strategy that's been proven to get results. And our price action channel strategy has been proven, tested, and we have lots of historical data around it. So I know that it's extremely profitable because I have hundreds to thousands of trades to back it up, to show you that this is a wildly successful strategy when executed the right way. So it is important that when you are using a trading strategy that you're using rules, because these rules are going to help you maintain consistency in your trading actions. If those rules do not apply in your setup, you simply do not enter the market. And what you want to collect is some data over time that shows that when you follow these rules consistently, you have hopefully a very impressive trading percentage that proves you're consistently profitable when you follow those steps. So let's talk about our price action channel strategy. Now, I'm going to start out on the monthly time frame. Regardless of what type of trader you are, I always recommend that you start out on the higher time frame. I would say the daily and above. Sometimes even as a scalper and short-term swing trader, I like to go to the monthly time frame because I like to see the overall sentiment and feel of the market. So, for example, if I am on the monthly time frame, one of the things that I can see is since 2015, this market has been in a decline. So if I'm a position trader holding the market long-term for months to a year or more, then my opportunity would have been to sell. So let's say even if I got in at this resistance here back in April of 2018, I would have been sitting real nice if I had shorted the market and held it even to here or even to here. So clearly you can see the opportunity is to the downside. Now let's talk about what's going on right now. So what do we see as of today? Let's say it's Monday. We want to plan for an opportunity moving forward. So one of the things that I can see is that we are in a downtrend, and I noticed that price has shot up and it broke some monthly highs here right at about 1.1512. Now we didn't break it fully because what we see here is that if I put a line right here, you'll see that we spiked above it. So we didn't break above it fully, but I do know that this is a very strong reversal area where the market pivoted in the past since 2016, and it came back multiple times years later, and it rejected this area quite forcefully. Now, what I also see here on the monthly is that although we are in a downtrend, this market has been falling for years. And in the last 1, 2, 3, 4, 5 months, the market has been building to the upside, but it's giving us a correction on the monthly. But we also could be seeing a possible trend reversal. We have a double bottom here. Here is a neckline, and this is a reversal pattern where the market just could break this neckline, come back to retest it, and then continue upwards. So that's a possibility. The reason why this is important is that I am building a case in my mind of what could happen in the markets, and this is going to help me be prepared for my particular style of trading. I need to know that I'm possibly up against a reversal. There's room for the market to move higher, but I also see that because of this rejective high at 1.1670 zone, there's room for the market to come back down and retest somewhere near our previous monthly low. So what I see is that the market could move back down a little bit. Although we've already pushed down to reject from this area, the market could very well fall a little bit lower to retest near these previous reversal areas, which was previous resistance, now turns support, and that's going to be significant. So I'm going to be mindful of that as I continue to drill down. So now I'm going to go down to the weekly time frame, and now I'm just going to make sense of the weekly. You can see on the weekly, we have a rising trend to the upside followed by an overextended double bottom. So here is our overextended double bottom. Here is our neckline area, I would say, where price actually broke that area. So I'll draw a zone for you so it's a little bit more clear. This support here, so look how the market broke above it. And then we broke above it, came back and retested near 1.1153, and the market broke to the upside. We then moved to the upside. We created a new high. This new high has now become support, and this is the new support this week in our uptrend after the market has rejected from a new high and pulled back to about 230 pips. So that is significant. One of my favorite setups is impulse correction setups. I love when the market has made an impulse and a correction, and then I'm either getting in for that continuation or I'm finding an awesome correction and process after a massive impulse, because the market always needs to come back and rebalance. So now that I know this, let's say, for example, I am an intraday trader or a short-term swing trader. Maybe I just want to take a trade overnight. Now, I've already looked at my key levels, and one thing I like about this area here is that this was previous strong resistance and it's now testing as support on the weekly time frame. So if I'm a short-term trader like an intraday trader, this level is going to be very significant to me. I'm going to go ahead and mark that level as my support. And then I'm going to go ahead and mark this level as my resistance, because that's my nearest resistance right now. So I'm going to go down to the daily. Notice that I don't have a bunch of lines on my chart. I don't have a bunch of zones on my chart. I only want areas or zones where I'm interested in executing a high probability trade. Notice what's going on here on the daily. We have marked our levels. We want to identify the trend. So you really want to find your trend, your level, and your signal. Now on the daily, I like that this is a rising trend. So we have an ascending trend. Okay. So here's our trend line on the daily. If we simply follow the market structure, we have a high, we have a low, we have a high, we have a low, we have a high, and now our previous high is being tested as a new low in the uptrend. Remember, we want to buy at a higher low. We do not buy at higher highs. This is not where we buy unless you are a breakout trader and you're buying off of a break and retest. And what that means is if price broke above this resistance, came back, retested this area as support, and you had confirmation, you could then go long if that's part of your trading strategy. But I preferably like to buy when the price is on sale or it's at an attractive area where I feel like I'm getting a good deal. So in this case, I feel that the market has pulled back enough in order for me to potentially go long, and I'm definitely going to be watching this area for a potential long opportunity. Now, as an intraday trader, I'm going to move down to the time frame that I trade. I can go to the 8-hour. I like the 8-hour intraday, and I also like the 4-hour. Now on this 8-hour, I'm simply going to add the 50-period moving average. You can see that price is trading below the 50-period moving average. So we use the 50 MA for confluence. In this case, I'm not so much worried that price is below the MA, but what I am going to look at is that this is still, in my opinion, in an uptrend on the 8-hour. So because I already identified this on the daily, I'm looking to see if price is going to respect this area. You can see there is wick rejection in the zone. So let's go ahead and define it. In order to trade the price action challenge strategy, we need to have a trend. So I found the trend on the time frame that I'm trading. Right now, I have an uptrend. And what I like about this is that I also have an uptrend on the daily. I want to be following the daily trend because if I'm looking to trade within that course of the business day, I want to be trading with the overall trend. So if the trend is upward, it's going to be more in my favor to take trades going to the upside on the lower time frame. So I might see a downtrend. For example, if I go down to the 4-hour, I'm going to see a downtrend. Okay, this is a downtrend, and you'll see that on this 4-hour, we previously had an uptrend, and let me show you where the trend was broken. When this low in our uptrend was violated, so this low at 1.1600. So notice we had a bullish flag pattern. We then had a breakout where price kept growing, and then you can see we created a high, and then the price started to sell off. So another pattern that you'll also see on this 4-hour that gave us a hint that this uptrend was going to come to an end is that you have a head and shoulder. A head, here's your left shoulder, your right shoulder. Here's your neckline where this was previous support, and that previous support turned resistance, and the market continued to decline. Okay, so now we know that we identified a region or area on our daily. It was right here. This is our area right here. So remember, we have to have our levels. We also want to have our trend on the time frame that we trade. So I'm simply going to have a level below price, and I'm going to have a level above price. Now, this is our resistance that we had on the daily. But if you are trading the 4-hour, you don't need to take profit way up here because as an intraday trader, you're only going for about maybe 40 to 50 pips or so. So what I'm going to do is I'm going to capture this price action inside of a channel. So now I have price at the bottom of the channel. I'm going to go ahead and clone this and I'm going to drag this trend line to my swing high. And now you can see that I have price trapped in the channel. I have a descending channel, which means that it's moving downward. But the nice thing about this is that price is at the bottom of my channel and it's in a reversal zone. This is a key reversal zone that we already identified on the higher time frame. And if I just continue to move out this way, you can see that this whole region right here, this was a rejective high, market declined to the downside, It was also support. So all within this region, we have where price was very strong support and resistance. So what we look for next is that we have our trend, we have our level, and now we need our signal. Now, our signal is that we want to see wick rejection within the zone. Now, we can even drill lower if we wanted to, and we can just study this area. For example, if I wanted to go to the 1 hour, look at that nice rejection inside the zone, and then you had price going in the desired direction. So far, if you would have entered off the wick rejection, taken this up for a couple of hours, it's only gone up about 32 pips, and it is Monday, so it's quite slow for a Monday, but I do believe that during the London session, this is going to pick up. So I just wanted to go through this step by step with you. I love how this looks on the daily time frame. You can see we have a wick rejection right within the reversal area. And after the market has fallen over 3, 4, 5, 6 days, it has fallen quite a bit into a major reversal zone. So that gives me confidence as well that it's going to go up. I'm seeing a lot of confluence that's working in my favor. I can also add the COT report, which is the Commitment of Traders report. I'm not going to go too deep into that, but even the data that just came out last week supports my bias for a long opportunity in the market. So I hope that this helps you, simply just going through a consistent set of rules and then executing according to those rules. So we are in GBPCHF right now for a signal. We've already hit take profit 1. Most times price will roll back to retest the region where we enter, and that gives us a chance for multiple re-entries, but we're looking to at least take this to the middle of the channel. I will probably swing trade this for a little bit longer and then move my stop loss to break even once we are about 50 to 60 pips in profit. So the middle of our channel, where would we take profit? Remember, if you have a channel, the rule is that we take profit in the middle of the channel. Typically, in the middle of the channel is where you are going to find a reversal zone. So look here, right in the middle of the channel would be previous resistance where the market retested and continued to sell off. So after a sell-off, we got a retracement or a bearish flag and then more downside. This was also support where the market came to, rested before it took off again. And then we can just kind of study this zone from the past to see that it's a very strong reversal area. But keep in mind that if you are buying again from the bottom of the channel, you don't need, well, it's nice to get about 90 pips on an intraday, but typically you're going for about 40 to 50 pips. So even though we take profit at the middle of the channel, you could even take this up for 40 to 50 pips and that would suffice for your setup. So I just wanted to walk you through exactly how I find a high probability opportunity. And in the case of the price action channel strategy, remember, managing your risk, we never advise you to risk more than 1 to 2% of your total account at any time. We teach a very specific risk method in our academy that goes in depth to managing your risk. And we walk you through that day in and day out. It's really how we're able to show up and be our authentic selves because we prioritize risk management. There's no way we could lead you towards success if we weren't properly managing our risks and executing the way we need to as professional traders to help lead you in the right direction. I'm sure you'd be able to spot it. But I hope that this helps you guys. Comment below and just let me know if you found this helpful, what other additional information or questions that you would like to see or you have questions about, and we'll do our best to help you. If you are a new or struggling trader, I want to encourage you to check out BK Trading Academy. All of our information is in the description of this video. We have training manuals, we have trading journals, we have trading plans. We have everything that you need to be successful. We have multiple profitable strategies that we show you how to trade in our live session weekly. We trade live twice a week at the moment with our students. We're in our community daily, holding your hand, showing you exactly how to get results. And all you have to do is follow what we have in place. And I promise you, I can say this with all confidence that if you put in the work and follow what we have in place, you will be a consistently profitable trader. I guarantee you, and I promise you, I can show you our trading statistics and what we've achieved over the years to help give you confidence. And I know that you can do the same thing. You have to stay the course. You have to stay consistent. You have to prioritize risk management and stop trying to make so much money in a short amount of time. Learn properly, get the foundational skills, find a mentor, stick with that same mentor. You don't want to have a bunch of people who are confusing you and giving you too many different things. You want to focus and hone in on someone that you can understand, you know that they have results, and you know that they have the resources to get you to where you need to be. Guys, I hope you enjoyed this. I look forward to seeing you in the next video. All the best in the markets this week or whenever you're watching this video, and I will see you in the next training video. Thanks for watching.
Yeah, I know I got problems, and I don't know where to go. I don't wanna put the blame on you.